Welcome to the Further Insights video podcast, episode number 2. Really excited to have Vlad Zagranichny, did I pronounce that properly?
Absolutely.
On the show today. We've known each other for a long time, and I've never actually said your last name out loud to you, so I'm glad I got that right. But glad to have you on today, and appreciate you taking the time. I guess just before we kind of just get started, if you can just kind of introduce yourself to the audience and tell them a little bit about yourself.
Sure. As you said, Vlad Zagranichny, own a CPA firm in Owings Mills, Maryland. We also do, besides CPA type of work, accounting, taxation, financial statement, things of sorts. We also do money management, asset allocation, and wealth management.
How long have you been an accountant?
So I passed the exam, I believe, 1999. So since then, we've been going strong. Started at KPMG, then went to work for a small local practitioner in Pikesville, and from that jumped ship and did my own firm.
Great. Did you know before 1999 that you wanted to be an accountant? Is this something you knew you wanted to do, or is it something that kind of school and your life experience led you to?
That's a great question, Andrew. So in high school, one of the elective classes was accounting, and it was one of these classes that just seemed like a natural fit. I just completely understood it, understood what it was about, understood what it was for, and it just clicked. So I knew going to college that accounting was going to be one of my majors.
Did you study, was that your major, or did you kind of do that after the fact? I know sometimes there's like another year or two that you need to get your CPA. Yeah. How did that all work?
So that was a new rule that came after my year of graduation.
Okay.
I actually graduated with a degree in accounting, finance, and psychology. But I ended up going down the road of accounting, obviously. And that was in 1997 when you could take the test. It was 4 parts, and then you passed the 4, and you then take a take-home ethics exam. And at that point, you are a licensed practitioner. Now, I believe the rules are somewhat different. I believe you now need 150 credits to be able to sit for the exam. Now, they don't have to be all in accounting. You could actually get a degree in anything else, but as long as you fulfilled the minimum requisite of the accounting classes and got your 150 credits, you can sit for the exam. So the rules are a little bit different now.
Gotcha.
And the exam is now administered, I believe, over 5 parts. So it's a little bit different, and the administration of the exam is somewhat different now. It's on the computer. As or before, we were doing the little Scantrons. So it's different.
Gotcha. And so, graduate with your degree in accounting. You know you want to be an accountant, and then it sounds like you went right to one of the big 4 firms from there?
KPMG.
Yeah, okay.
That was a law of my land. Yeah.
How was that? Did you have the intention of staying there permanently, like some people kind of go into this knowing they just want to rise the ranks, or did you always kind of know you were entrepreneurial and wanted to do your own thing?
Sure. Anybody going to any of those firms thinks that they want to stay the path of becoming a partner and just being the rainmaker over there. And I learned very quickly, a couple years into it, that you could be the most amazing accountant, the most knowledgeable accountant, but if you can't make it rain, if you can't bring in the business, you know what you're going to be? The best accountant sitting off in the closet somewhere. So having seen the wear and tear on some of the seasoned accountants, I realized very quickly that either I stay there and grind myself to death for them, or using my work ethic, I'll just go do it for myself. So,
were you doing general accounting, like taxes, auditing? What kind of role did you have out of the gate?
I started, because I had a degree, one of my degrees was in finance, they let me choose my path, if you will. So I was specializing in the financial sector. We had audits and consulting engagements for bank, lending institutions, things of that nature. That was my starting point.
Gotcha. How long were you there at KPMG?
A few years. I was there for a few years, and I, right after that, left and did my own thing with tax. I circled back with the practitioner I started with, worked with him for a little while, and then opened my own doors.
So what was that aha light bulb moment for you where you're like, I'm ready to go out on my own, I know it's time?
That's a really good question, actually. The first point came when I was working at KPMG. We were on an engagement at a bank, and I remember, because of the bank hours, we had to be there very, very early, like 7 in the morning, something very early. And I remember walking in at 7 in the morning with the senior manager there, being on the phone with his daughter, justifying and explaining himself why he's missing her soccer games. and it's all work related, and he's sorry up and down. He'll make it up to her at some future point in time. That day I decided I was done.
Mm-hmm. You just knew you needed to have more control of your life.
I knew I needed to have more control over my work life, and I didn't want to be a slave to any employer.
Sure. So, start your own practice. Did you have a business that you kind of had and inherited and started it that way? Did you have to like go out and get all new clients? How did that all go down?
Sure. So this was early 2000s, very, very late 99, I believe. And I didn't inherit anything. I started from scratch. And I was very lucky because most accountants, they're very dry. They don't really have much of a personality. I was blessed because, first of all, I enjoy socializing. I enjoy talking to people. I like being out and about. And that certainly helped me bring in a lot of business through the door because I became very friendly with my clientele. You know, we would do things together, we would have dinner together, lunch, and they send referrals, and then I started doing networking events, and one thing led to the other, and just, I was lucky.
Mm-hmm.
I was lucky, and I think I did all right.
So the firm you started then, is that still the same firm fundamentally you have now, or is what you're doing now a different practice?
Totally different practice.
Okay.
When I started, it was Vlad Zagranichny, CPA, PA. It was just really a one-man show. As it started to grow, I started to hire. Then I became partners with Stan Berkman. We were partners for a while up until recently, where he starts the retirement process, and I have absorbed his practice into mine under the new ZAG Consult Group, LLC.
Excellent. So, you know, having worked with you on that rebrand and this transition now to ZAG, you know, it's a new practice, but it's an existing practice, and it sounds like even as you evolved from KPMG to now, a lot has stayed the same, but I'm sure a lot has changed, and a lot will change. Kind of what is different about the work you do now versus what you did when you first started?
When I first started, I was it. I was the HR department, I was the payroll department, I was the admin, I was it. Now, luckily, I don't have to do any of those things. I'm very blessed because I have a phenomenal team that we all work together. We all do very well together. Our personalities seem to mix very well. So a lot of it is delegated. Luckily, I don't have to do a lot of the things I was doing before. Now it's more review work, relationship with the clientele, and so forth.
Mm-hmm. So now that you've kind of rebranded, relaunched, with a core client base, what are you thinking in terms of marketing to get new business in? Do you think the referral, kind of keeping it more small and client driven, is sustainable, or do you think, as you know, you're going to this next phase of your career, that you want to have more kind of inbound people coming to you? What's your view on that as kind of a middle market company now?
So I think that the internal organic growth, I've pretty much maximized it.
Mm-hmm.
So I think the next logical step in my evolution growth would be to have you guys do what you do best. You've been phenomenal, and you know the steps that we've done before with the name rebranding, the logo, the letterhead, the website. You guys have done an amazing job, and I think now it's a function of me just pulling the trigger and having you guys do the next piece of what you want to do.
I appreciate that. No, we really enjoyed that rebranding process, and we definitely took a business view of what the brand should be based on competitors and demand and what's out there. But at the end of the day, you know, you do so much more than just people's taxes, and I think that's such a common misconception of when people just think of accountant, they just think of, oh, I can send my stuff for my taxes, and that's the end of the story. It's like what you guys do is so much more than that, and I think there's a lot of people that don't understand what they're missing or what they're leaving on the table by not working with a consultant and somebody that understands the full financial picture, especially as a small business owner. So that's definitely what I'd love to hear you talk about. It's just like, what are the things that small business owners need to be doing beyond just filing their taxes?
Sure. Well, the first thing is a lot of the business that we get, one of the first questions I ask a potential client is, why are you switching from your current accountant or your current advisor? And one of the top reasons I get is the fees. People are billed in excess of what they think they need to be billed, okay? because of that fear of being overly billed, the client doesn't communicate all the things that he or she should communicate to the accountant. So oftentimes, end of year comes and the client will get a big surprise. You have a huge tax bill. Well, why didn't you tell your accountant? He would have helped you plan for that. Well, every phone call I get hit with X amount of dollars and I didn't want to pay for that. So that's one of the top reasons I get people switch their accounting firms. And what we do is we come up wherever possible. We do a more fixed fee approach to just about everything. So for our business corporate clients, we charge X amount per month, includes all the accounting, bookkeeping, payroll, tax consulting, tax projection, tax preparation. We pretty much include everything under the sun. They pay a fixed fee amount every month. There's no surprises to them. There's no surprises to us. It's cash flow predictability, right? They know what they're paying. I know what I'm receiving. I don't usually adjust that up or down. It's always very fair for both of us. The only thing that's exclusive of that is if the client gets an audit letter. So if they get a letter from the IRS saying we're now auditing you or examining, that's a separate engagement outside of the scope of what we've already agreed to. But that's the number one thing, is don't be afraid to ask your accountant to do more of a fixed fee arrangement.
Mm-hmm.
And
is that pretty standard, or are you kind of disruptive in that regard?
Probably 50-50.
Okay.
Probably 50-50.
Is that a newer thing that's shifted to more of this monthly recurring revenue model, or like traditionally was it just fee for service, hourly kind of thing?
Fee for service is the way to go.
Mm-hmm.
I would probably tell you that 90% of the firms that I know, they strictly stick to hourly billing.
Mm-hmm.
They love hourly billing for a number of reasons, but at the end, I think it can be detrimental to the practice with some clients who are a little bit more fee sensitive.
Do you do the same pricing structure for individuals that are not business owners?
Generally, they don't need that, Andrew.
Sure.
Generally, what we do is somebody comes in for an interview, we look at the prior year return, we ask them, do you anticipate the current year being similar, yes or no? Generally, the answer is yes. I'll give them a fixed fee, and again, that's inclusive of phone calls, email. I don't nickel and dime. I don't charge for phone calls. I don't charge for emails. I poo-poo that with every ounce of poo-poo-ness me that I have. I hate that. So I don't like nickel and diming people. At the end of the day, everything that we do is based on relationships, right? Mm-hmm. It's all about a relationship. And if you bill someone in excess, they look at that as an offense to the relationship.
Absolutely. So you're at this point now, you have a core business model. It sounds like you have a couple of things you're trying to test now, like fractional CFO versus just general accountant. It sounds like you also have another service, like in regards to wealth management, or let's say growth, financial growth,
Sure.
and investing as a whole. So what does that part of the business look like, and what is your view overall, I guess, of the market right now?
So first of all, we have not aggressively gone out with marketing campaigns to get clients strictly for financial planning. It's been organic with the tax clients that we have, where
just based on the fact that they have this income or these complexities.
Exactly.
Yeah.
Exactly. One sort of goes hand in hand with the other, and I love the fact that we can control all sides of the money equation: how much you're making, how much you're spending, how much you're getting taxed on investments. Mm-hmm. It makes it a little bit easier to plan, as opposed to reaching out to the other guy who you might not have a great relationship with.
Sure.
Okay. Overall market conditions, it's going to be a bumpy road, I believe, until the energy.
It hasn't been bumpy already?
It's going to be bumpier until the energy and labor issues have been ironed out. Mm-hmm, mm-hmm. And I believe that's a long road ahead of us.
Mm-hmm. I think so too. Listeners, I know we both work with real estate investors, people who do a lot of fix and flip projects, start a bunch of different LLCs for various tax purposes. And we had Aaron Alberti on the last episode, and I asked him about, how do you, save yourself from crazy capital gains taxes, and how do you protect yourself from getting just burdensome tax bills when the profit's this big and this many projects. And he said, I basically trust my accountant, was his view. So we figured as a follow-up to that segment, we'd ask the accountant who deals with real estate investors specifically as well, like what is the best way to offset or mitigate risk from paying absurd tax bills when you're dealing in a business like that?
Sure. So first thing you need to consider is the nature of the project for the actual real estate investor. Are they flipping homes? Are they holding homes? Are they renting homes? Because if they're in the business of renting homes and then they want to dispose of these rental properties, there's a lot of creative strategies, namely something called a 1031 exchange, where they can basically defer the gain on the sale of property A into property B, and then into property C and property D, and so forth and so forth. So there are a lot of strategies that we can implement or suggest to the taxpayer to assist them with the tax burdens. There's also a lot of things that taxpayers miss at times, allowable legal deductions that they might just not know about. You know, the use of the car, the cell phones, the home office allocation. There are a lot of people that are simply unaware of that. And we educate them and we implement these strategies into practice.
And so, like, as just a small business owner, are those things that you just, if we were to work together, is that something that you would just account for when you're doing tax prep? Is that something that I need to proactively have a conversation with you about? Is that something you're just, bringing to the attention of your client, or like how does that work?
So we will generally look and see what's been run through the bank account. And outside of that, we'll have a separate interview and say, Andrew, have you thought of this? Have you thought of that? Do you pay for this? Do you pay for that? Do you have children? Can we put them on payroll? Because that's another allowable, it's a major allowable tax deduction to get a child on payroll for any dollar amount under the standard deduction. So a company gets a big tax deduction and the child doesn't pay taxes on that. But there are certain rules that you have to follow and stay within the boundaries of the law to make sure that everything's done in a very kosher manner.
Besides filing your taxes every year, forget business owner or not, somebody's got, a decent income and maybe from a variety of sources. Is there one single piece of advice you can give somebody to generally avoid paying the maximum tax they would have to in a legal, ethical way, or is it really just situational based on each individual person's situation?
Sure. Every tax client that we have is a unique snowflake. Okay, no two are the same. But the one generic blanket suggestion that I would make to anybody is always maximize your 401k. Maximize your tax deductible contributions to any retirement plans.
So Roth IRA as well, same deal?
Well, those are a little bit different because those aren't tax deductible, but they're also not taxable to distribution. But it also depends on the client. Like I said, they're all different. But overall, as one generic, very blanket statement, maximize contributions to tax deferred plans.
What about for our newly minted crypto millionaires and billionaires? I know they have to pay tax if they liquidated, right? If they sold anything that the government can track, they're going to pay the capital gains taxes on it. What's your view on crypto as a whole from an accounting perspective? And is there any way that people can avoid paying taxes and remain liquid in that market?
So I'm not an overly huge fan of cryptos. I'm probably not going to be very popular with the younger generation by that comment, but I think that there's a lot of issues with cryptos. I think that they are very vulnerable. I think that they're very volatile, more so than the dollar. They're not really backed by much, okay? When it comes to taxation, they're really triggered by the sale or disposition of a crypto. No different than you would sell a stock or a bond or any other marketable security. That's what triggers the gain. And the only true offset to that is to liquidate or sell any positions that would generate a loss to offset those gains.
So, you can lose money to save money on taxes.
Of course.
Yeah.
Of course.
Yeah.
Of course.
Thank you for connecting us with John over here. And he's off camera always. We'll get him on camera eventually, but our new marketing director, really great team man. He's a great team member.
I liked him when I first met him, and I knew he'd be a great addition to you guys.
Absolutely. We're glad to have him. So let's see. So getting outside of accounting for a second, more as an entrepreneur, what do you like about being an entrepreneur? What do you dislike about being an entrepreneur?
Sure. I love the flexibility, the freedom. You don't answer to anybody. However, you do answer to the people who you work with, okay? Because if I drop the ball, if there's an inefficiency on my part, it trickles down to them. And so at the end, even though I don't have anybody standing above me, I have people standing next to me that are dependent on me being proactive, me being efficient, me being able to communicate to them what needs to get done, and so forth and so forth. I love the flexibility. I love the freedom. But at the same time, with great power comes great responsibility. So one of the big things is, as I said before, when you're an entrepreneur and you run a small practice, you're it. You're doing the billing, you're paying the bills, everything falls on your shoulders. So that's the biggest probably downside, I would say, to something like that.
How do you stay sane or, just at least relaxed while dealing with all the pressure of running a business and growing a business? Like, what do you do for fun?
I'm very blessed. We have a great team. I've said it before and I'll say it again. We go to work. We enjoy each other's company. We'll talk sometimes. We'll have lunch together. We'll hang out. We'll socialize. It doesn't feel like work. And over time, you get to know your clientele. And over time, you get to work with clientele who are like-minded and who you enjoy, and they enjoy your company. So when I get a phone call, when I get an email, I enjoy communicating with these clients. I love it. So there's things that I do. I love the beach. I love to hang out with my kids, yada, yada, yada. But at the end of the day, I get up, I go to work, and I don't consider it work. It's just an extension of my home life. So it's a blessing. It really is a blessing.
It is. If you love what you do, it's not really work.
It's not really work.
But what is work is barbecue and properly smoking meats. I know that's something that we both enjoy.
Absolutely.
You guys you got a smoker at the office? Like, how does that play into your work life?
No smoker at the office. Can't do that. But yes, I'm an avid fan of smoking meat, grilling, cooking, marinating. That's my thing. That's one of my
What's the last thing you smoked?
Beef ribs.
Oh, wow.
Actually smoked
the big
beef ribs.
The
dino ribs. I've done the big dino ribs.
Where'd you get those?
There's a place called, it's in Moncton. It's called Rosetta.
Oh, Rosetta, okay.
Rosetta Beef Farm. You have to pre-order those because they are literally about the size of my arm.
Yeah.
Picked up those, smoked chickens. Just, I love doing all that stuff.
You have a offset, Traeger, what's your
I have a Yoder. I have a Yoder 640.
Okay. Is that a pellet? Or
it is a pellet.
Okay, cool.
It is a timed pellet, but I also have a green egg.
Oh, right on.
Have that, and my son also bought me a simple kebab grill.
Nice.
So he benefits first and foremost from the use of that.
That's awesome.
So in fact, I'm actually making kebabs this Sunday, I believe. Kofta.
Fantastic.
Making kofta kebabs. That's certainly one of my pastimes. Love working out. Love going to the gym. Not as much as this guy over here, but close. And lately, my son's gotten into that routine with me, so I take him as much as possible.
Well, as a follow-up episode to this one, we'll have to smoke some meats and work out. It'll be a great day.
You name the day, and I will be there with the meat and the gym.
Oh man, that's hilarious. So when you look at the next phase of growth for ZAG, for your firm, what does it look like to you? Like, what does success of this next phase of growth look like for your firm?
Two things. Number one, increasing the number of clientele, making sure we're as efficient as we can be, making sure that our feedback from the clients is beyond positive. We don't want to just get to their expectations. We would like to exceed their expectations of us in terms of work output, timeliness, so forth and so forth. On top of that, on the financial side, of course, we always want to increase the amount of assets under management. That's a big goal for us in the next 1 to 5 years.
Excellent. Well, you're on your way for sure. If anybody's watching and needs, accounting services, you know to call.
Don't let the T-shirt fool you.
But a cool accountant is going to make you some barbecue. If somebody is about to graduate, wants to be from college, getting an accounting degree, wants to go into this field and wants to be where you are in the future, do they go to KPMG or do they go to ZAG? What would you tell them to do?
Do both. I would absolutely tell them to do both. They have to start, in my opinion, at a large organization, sort of understand the layout of the land, see if that's where they want to be. And what we've discovered is that a large percentage of kids, students, if you will, young adults, they don't want to end up at the big accounting firms. It doesn't fit personality-wise. It doesn't fit their work ethic. They just don't want to do it. Some people end up going to do accounting as a CFO, as a controller, at a lot of the clients that they serviced when they were at the large accounting firms. A lot of people end up going into the small firms and then branching out and doing their own thing. But the one suggestion I would make to anybody starting, start at a large organization, see if you like it, what you don't, and go from there.
Mm-hmm.
It's a great opportunity. It's a good time to experiment, and don't be afraid to try things on your own.
Mm-hmm.
Don't be afraid. Be out there, make connections, network yourself, talk to people, see what the demands are, and the most important thing is don't be afraid to make a change.
Mm-hmm. What are the three best pieces of advice you can give to someone looking to start their own firm, whether it be accounting or anything else?
Surround yourself with good people is probably the most important thing I will tell you. Your accountant, your lawyer, any advisor you have, a marketing director, because at the end of the day, your success and protection of your success is directly dependent on them, number one. Number two, definitiveness of purpose. You have to know what you're doing. If you want to be in the business of owning a liquor store, for example, focus strictly on that. Don't worry about other ancillary things. Those things will come across anyway. Just always remember definitiveness of purpose. And number three, enjoy what you're doing. If you don't enjoy what you're doing, you're going to hate it. You're going to hate it, and as I always tell my kids, don't chase the dollar. If you're good at what you do, if you like what you do, the dollar will find you, and you're going to be good at it.
Amen. That's awesome.
That's
Thank you so much for joining us today. It was a really great conversation. And if anybody wants to reach out to you, how do they get in touch?
So the easiest way is 410-902-0223 or zagconsultgroup.com. We'll take you to the website, and you can find our contact information there.
Awesome. All right, well, that's it for this one. We'll see you next time.
Thanks for having me.
Thank you.